Yes, it finally happened. Lucid Motors and Churchill Capital's CCIV SPAC stock have finally announced a merger deal. They released this tweet stating that they have entered an agreement to merge with CCIV and that going public will accelerate their efforts to introduce the most advanced EVs in the world. And this announcement fit exactly as we had predicted on our merger timeline video, on a Monday during the February-March timeframe. But why isn't the market taking this so positively? We just saw a steep after-hours drop of CCIV stock, bringing it down to a $40 range. We'll be going over the actual terms of the merger agreement and why there was a market sell-off. So let's get started. Hello everyone, this is Mark with MC Stocks. Remember to subscribe and hit the like button for more videos like this one. And as always, remember to do your own due diligence when investing and seek a financial advisor for professional advice. So that's right. After over a month of speculation since the initial Bloomberg article, Lucid Motors and CCIV officially announced a merger deal today on Monday, February 22nd. We first broadcasted the high likelihood of the merger following through in the February-March timeframe, specifically on a Monday, back on our merger timeline video. So make sure you subscribe to our channel to get the latest analysis that we release regarding the market's hottest stocks. So Lucid and CCIV will be merging just as we all hoped. And now we officially will have another EV company entering the public market, one that is set to be a strong competitor to Tesla. So it should be all happy sailing from here, right? Well, clearly not so if you checked out CCIV's stock chart after the announcement was made. You'll notice a steep drop-off, bringing the price back down to around $40. But why? Weren't we all hoping for the merger to follow through? Well, just as we warned in our previous videos, the easy way to look at this drop-off is the simple buy the hype, sell the news trend. We have seen this trend time and time again throughout 2020. So it really should come as no surprise to see a similar stock reaction with CCIV after the official merger announcement. In fact, we even have seen some articles suggesting that people follow this buy the hype, sell the news trend. But let's dive in a little deeper. As we have also mentioned in our previous videos, CCIV stock is heavily owned by large institutions. So much so, in fact, they own more than half of the publicly traded shares available. This means that it could have just taken a handful of these large institutions to decide to sell their shares right as the announcement hit, sending the stock price plunging. But let's actually take a look at the terms of the agreement. Lucid published this article release right on their website, detailing the terms of the agreement. From the article's title, Lucid is clearly pretty happy about the announcement. They state that this deal to go public with CCIV bolsters Lucid's vision to redefine luxury, performance, and efficiency in the sustainable electric vehicle market. Now let's scroll down to where they detail the agreement terms. On the third bullet, they state that CCIV and Lucid are combining at a transaction equity value of $11.75 billion. So this valuation matches up pretty closely with Reuters' estimate from their article last week of the valuation being at $12 billion. But let's continue on. Here we have some key details about the PIPE transaction that was recently announced last week. The fourth bullet reads the following. The transaction includes an approximately $2.1 billion cash contribution by CCIV and a $2.5 billion fully committed PIPE with an investor lockup provision that binds holders well beyond closing. The PIPE is priced at $15 per share, a 50% premium to CCIV's net asset value, with an implied pro forma equity value of $24 billion. So there are several key points here. Number one, Lucid will have a good chunk of cash to work with raised through CCIV and through the PIPE transaction. Second, investors in the PIPE transaction have a binding to hold their shares, quote, well beyond closing. So this means that we won't see any sell-offs from these PIPE investors anytime soon. Third, these PIPE investors got their shares well below current market value at $15 a share, 50% more than CCIV's $10 original price tag. And that's not all. The last key point here is that this PIPE transaction evaluated the combined Lucid CCIV entity at an implied pro forma equity value of $24 billion. To be clear, pro forma is Latin for as a matter of form, or for the sake of form, and is a method for calculating financial results using certain projections or presumptions. Furthermore, it is illegal for publicly traded companies to mislead investors with pro forma financial results that do not use the most conservative possible estimates of revenue and expense. So this means that the PIPE transaction gave a conservative estimate of $24 billion for the combined entity. This is much, much higher than the originally estimated $15 billion valuation. Because of this, the argument here is that there is less room for Lucid to grow in the future if you invest into the stock at this valuation. Also, at this higher valuation, it would be much harder to justify given that Lucid has not actually delivered their vehicles yet. Likewise, one of the downsides of these PIPE transactions is the fact that there would be share dilution for current shareholders. These investors got in at a deal price tag, while any other buyers would need to buy at a much higher market value. So because of these facts of the deal, we can explain the big after-hours sell-off. But is all hope lost for the stock? Not at all. There will definitely be high volatility in the stock, just as we predicted in our last video. But nothing fundamentally changed about the business, so the long-term potential for Lucid still stands. This could be a great buying opportunity if you see the potential in Lucid Motors and want to grab some shares for yourself. If you're looking to buy shares of CCIV, now becoming Lucid Motors, and need a brokerage, be sure to use a referral link for M1 Finance in the description below. M1 Finance is doing a great offer currently where you can get a free $30 using a referral link. So use the link below, earn an easy $30 and don't miss out. Good luck everyone with your holdings and stay tuned on our channel for any news regarding Lucid Motors. Thank you for watching today's video. Don't forget to subscribe and hit the notification bell to get notified when we release our next video. Please like and share for more videos similar to this one, and comment below with any questions that you may have so that we can address them in future videos. Thanks.